In the fast-paced world of cryptocurrency, where fortunes can shift in the blink of an eye and global economic forces converge to create moments of profound opportunity, Bitcoin has once again proven its enduring strength by steadfastly holding above a crucial key support level, igniting fervent debate among traders, investors, and analysts about whether this stability signals the ignition of the next major bull run starting in earnest right now. Welcome to Crypto Hub, your premier destination for professional data-driven insights into the cryptocurrency markets, where we cut through the noise to deliver clear, actionable analysis on the trends shaping the future of digital assets. Today, we bring you a detailed market update centered on Bitcoin's current positioning, examining the technical, fundamental, and macroeconomic factors at play as we assess if the stage is truly set for a renewed upward surge in the coming months. Bitcoin's price action over the past several weeks has been nothing short of resilient amid a backdrop of broader market consolidation following the peaks observed in late 2025, with the asset currently trading in the vicinity of $75,000 to $76,000 after rebounding smartly from local lows around $73,700 and maintaining a firm stance above the pivotal $74,400 support zone that many technical analysts identify as a structural floor formed by previous price action and on-chain activity clusters. This hold above the key level is not merely a fleeting observation, but a significant development that warrants close scrutiny, as it comes at a time when investor sentiment has been tempered by lingering effects from the 2025 bull market cycle, which saw Bitcoin reach highs near $126,000 before entering a phase of corrective consolidation that has tested the resolve of even the most seasoned market participants. The $74,400 mark, often referred to in trading circles as a confluence of moving averages and historical pivot points, has acted as a magnet for buying interest, with volume surging noticeably on rebounds and exchange data indicating that large holders or whales have been accumulating rather than distributing at these levels, suggesting underlying conviction that the downside risks are contained for now. Delving deeper into the technical landscape, Bitcoin has recently managed to break and retest the 100-day exponential moving average, a development that carries substantial weight in trend-following strategies, as it often precedes sustained moves higher when accompanied by rising momentum indicators such as the Relative Strength Index, which has shown early signs of climbing out of neutral territory without yet reaching overbought conditions that could invite immediate pullbacks. Resistance levels overhead cluster around $79,800 and $79,100, areas where selling pressure has historically intensified due to profit-taking from shorter-term holders who entered during the 2025 rally, yet the absence of aggressive distribution below the $75,000 psychological barrier points to a market that is cautiously optimistic rather than fearful. Candlestick patterns on the daily and weekly timeframes reveal a series of higher lows forming since the early April dips, a classic bullish structure that, when viewed alongside Fibonacci retracement tools drawn from the 2025 highs, places the current price in a zone where a decisive close above $78,000 could open the door to a measured move toward the $80,000 region, potentially accelerating into the $100,000 plus territory if broader risk appetite improves. On-chain metrics further bolster this narrative, with realized price levels around $89,000 from prior cycles now acting as distant but relevant overhead magnets, while metrics like the active realized price near $89,400 and the true market mean around $82,400 provide analysts with clear benchmarks for evaluating whether the current consolidation is merely a healthy pause or the precursor to something more explosive. From a fundamental perspective, the drivers behind Bitcoin's ability to hold these key levels are multifaceted and rooted in the evolving institutional adoption landscape that has transformed the asset from a speculative play into a recognized store of value within diversified portfolios worldwide. Spot Bitcoin exchange-traded funds have continued to see robust inflows even during periods of price stagnation, offsetting any temporary outflows and providing a steady bid that has helped anchor the price above critical supports amid fluctuating traditional market conditions. This institutional demand is not isolated, but part of a larger structural shift where corporations, pension funds, and even sovereign entities have increasingly allocated capital to Bitcoin as a hedge against fiat currency debasement and geopolitical uncertainties, a trend that gained momentum post the 2024 halving event and has carried forward into the current cycle despite the corrective phase observed after the October 2025 peak. Macroeconomic factors also play a pivotal role here, with recent developments in global risk sentiment, including signals of de-escalation in certain geopolitical hotspots, such as discussions around the Strait of Hormuz and related oil price dynamics, contributing to a more favorable environment for risk assets like Bitcoin by reducing safe haven flows into traditional havens and allowing capital to rotate back into growth-oriented sectors. Interest rate expectations from major central banks remain a key variable, as any indications of further easing could amplify liquidity conditions and support higher valuations for non-yielding assets, such as cryptocurrencies, while conversely, persistent inflation concerns could cap upside potential in the near term but appear priced in given Bitcoin's demonstrated resilience at these levels. Historical cycle analysis provides additional context for evaluating whether the next bull run is indeed starting now, as Bitcoin's 4-year halving cycles have consistently delivered periods of accumulation followed by parabolic advances, with the post-2024 halving phase aligning closely to patterns observed in prior iterations, where initial exuberance gave way to consolidation before the true leg higher materialized in the subsequent year. In 2025, the market experienced what many describe as a snake-like, twisting price action that ultimately topped out near the projected cycle highs. Yet as we move through April 2026, the structural integrity of the bull market remains intact, according to several prominent on-chain analysts, with declining exchange reserves, increasing long-term holder conviction, and a tightening supply dynamic setting the foundation for renewed momentum potentially emerging in the coming quarters. CryptoQuant and similar research platforms have highlighted that similar supply shocks post-halving have historically led to the next major uptrend commencing between early and mid-cycle years, positioning 2026 as a plausible window for the acceleration phase if demand catalysts align, including continued ETF momentum and broader regulatory clarity that encourages further mainstream integration. This is not to suggest an immediate vertical rally without interruptions, as markets rarely move in straight lines, but the current hold above the key level could represent the base building phase that precedes such an advance, much like the periods observed in 2021 and 2023, where patience at support zones rewarded those who maintained a long-term orientation. Examining the broader cryptocurrency market ecosystem reveals that Bitcoin's performance is serving as the anchor, with major altcoins exhibiting correlated but often amplified movements that underscore the leadership role Bitcoin plays during transitional periods. Ethereum, for instance, has shown signs of decoupling in certain DeFi metrics, but remains tethered to Bitcoin's dominance, which currently hovers in a range that favors blue-chip assets over speculative tokens until clearer directional signals emerge. Market-wide liquidation data indicates that short positions have been squeezed during recent rebounds, adding fuel to upward moves and creating a self-reinforcing loop where positive price action draws in additional buyers while deterring aggressive bears, a dynamic that could intensify if Bitcoin sustains its position above $75,000 through the end of the week. Volume profiles across major exchanges highlight increased participation from retail and institutional traders alike at these support levels, with derivatives open interest remaining elevated, yet not indicative of excessive leverage that might precipitate a sharp unwind, further supporting the case for measured optimism rather than euphoria. Potential catalysts on the horizon include upcoming macroeconomic data releases, such as inflation reports and employment figures from key economies, which could influence Federal Reserve policy trajectories and, by extension, risk asset pricing. Any dovish signals would likely bolster Bitcoin's appeal as a non-correlated store of value, while hawkish tones might test the $74,000 floor once more, but with the expectation of strong defense based on recent behavior. Regulatory developments also warrant attention, as evolving frameworks in major jurisdictions continue to provide a more defined pathway for institutional entry, reducing uncertainty that has historically weighed on sentiment during consolidation phases. Expert opinions from firms like Standard Chartered and Bernstein, which have forecasted Bitcoin reaching $150,000 by late 2026 under base case scenarios driven by institutional flows, align with this view that the current stabilization is not the end of the cycle, but a reset that could propel the asset toward new highs, potentially in the $120,000 to $170,000 range by year end if conditions remain constructive, with more bullish extensions eyeing $200,000 or beyond in an optimistic, liquidity-driven environment. Of course, a balanced analysis must acknowledge the risks that could derail this potential bull run ignition, including the possibility of a breakdown below the $74,400 support if external shocks materialize, such as renewed geopolitical tensions or unexpected regulatory headwinds, which might trigger a cascade toward the $72,000 or even $69,000 zones, as outlined in various pivot point calculations and historical precedent from similar cycle corrections. The overall opinion from technical models remains positive in the short to medium term, with scores indicating upward bias provided the price holds the recent breakout levels. But traders are advised to monitor for confirmation signals such as a weekly close above $77,000 or sustained increases in hash rate and network activity that reflect growing ecosystem health. On-chain indicators like the cumulative value days destroyed model suggest that even in a deeper correction scenario, the floor could find support around $45,000 in an extreme bear case, though current market structure makes such an outcome appear low probability given the resilient buying observed at higher supports. Furthermore, the interplay between Bitcoin and traditional financial markets cannot be overstated, as correlations with equity indices and commodity prices have fluctuated but generally trended toward positive during risk-on periods, meaning any resurgence in stock market rallies or declines in bond yields could provide tailwinds for cryptocurrency valuations. The halving's long-term impact on issuance rates continues to exert a deflationary pressure on supply, a factor that becomes increasingly pronounced as demand scales with adoption, creating an asymmetric upside profile that many long-term investors cite as the core reason for maintaining exposure through consolidation phases like the one we are currently navigating. Community sentiment, while mixed with pockets of caution following the 2025 peak, shows signs of shifting toward accumulation, as evidenced by social media discourse and search trends that emphasize education and strategy over panic selling, a maturation that bodes well for sustained growth rather than boom-bust volatility. As we synthesize these elements, the question posed by the title remains at the forefront. Is the next bull run starting now? The evidence points to a compelling setup where Bitcoin's hold above the key level serves as a foundation for potential expansion, not a guarantee of immediate parabolic gains, but a professional indicator that the market is transitioning from defensive consolidation to a more proactive growth phase, one that could unfold over the coming months with the right confluence of catalysts. Investors and traders alike would do well to approach this with disciplined risk management, focusing on position sizing, diversification across correlated assets where appropriate, and continuous monitoring of both on-chain and off-chain developments to stay ahead of shifts in momentum. The cryptocurrency space has evolved dramatically over the past decade, maturing into an asset class capable of withstanding macroeconomic pressures while retaining the innovative edge that first captured global attention, and Bitcoin's current behavior exemplifies this resilience in real time. Looking ahead, the weeks and months to come will likely provide clearer confirmation signals, whether through a breakout above near-term resistance or a retest of supports that holds firm, each scenario offering opportunities for those prepared with a structured approach grounded in both technical precision and fundamental understanding. In this environment, staying informed through reliable sources becomes paramount, as the difference between reacting to noise and capitalizing on genuine trends can define portfolio outcomes significantly. The broader implications for the crypto market extend beyond Bitcoin, potentially lifting altcoins and related sectors in a rising tide scenario. Yet the primacy of Bitcoin as the market leader ensures that its trajectory will dictate the pace for the ecosystem as a whole. In wrapping up this detailed update, the resilience displayed by Bitcoin above its key level offers a measured dose of encouragement for those who have followed the asset's journey through cycles of hype and correction, reminding us that patience and informed analysis remain the cornerstones of success in these dynamic markets. At Crypto Hub, We remain committed to delivering these professional insights with the depth and clarity you deserve, empowering you to navigate the cryptocurrency landscape with confidence. Thank you for joining us today, and we look forward to bringing you the next comprehensive market update as developments unfold. Stay vigilant, stay informed, and until next time, this is Crypto Hub signing off.